Good morning, Bitcoiners, and welcome back to your economic calendar for a pretty busy week ahead. Today is Tuesday, September the 13th, and just a few minutes ago, we got the inflation reading out of the US for the month of August, which came in hotter than expected, and markets are selling off and reacting accordingly. We're going to break down how this news could impact markets in the weeks to come. We also get the highly anticipated Ethereum merge happening this week. We're going to break down how that could impact Bitcoin prices as well. We get statements from the SEC chairman as well as the chairman from the CFTC. And we're also going to cover a wave of bailouts, which are ongoing all the way from emerging markets to Europe and Latin America, and how those could be impacting markets. So lots to cover today. Grab your coffees. It's going to be a great one. So let's start with the news we just got, which was the inflation reading out of the US for the month of August and how markets are reacting to it and how they continue to be impacted by this news in the weeks to come. As you can tell from the headline on your screen, stocks and Bitcoin are both selling off after the fact, after the release was published. And this is because investors were expecting for the month-over-month inflation reading to come down by negative 0.1%. And in fact, this came in higher by 0.1%. The bigger problem is arguably on the core inflation, which excludes food and fuel or energy. And this inflation reading came in at a 0.6% month over month increase versus a 0.3% expectation. So more than double the investor expectations. This has caused investors to essentially reassess their expectations in terms of the increase in interest rates that the Fed is going to carry out between now and the end of the year. Going into the CPI reading, most investors had almost an 80% consensus that the interest rate was going to be at 4% by the end of the year. And as of this news today, we are seeing that this consensus is essentially dissipated, with now almost 70% or more of investors thinking that the interest rate will be much higher than 4% to the tune, or even, some are even pointing the possibility of having a 4.75% interest rate towards the end of the year. Naturally, this is a much higher interest rate expectation that we had going into the reading, and investors are essentially recalibrating this potentially higher rate before the end of the year and what that could do to stocks. As we know, interest rates put headwinds on stocks, and no surprise, number came in hotter than expected, and the markets are selling off. And this week, we also get the highly anticipated merge to proof of stake on the Ethereum blockchain. And this event is scheduled to occur on Thursday evening this week. Now, to understand how the Ethereum merge could impact Bitcoin prices, we're going to take a look at how Bitcoin has been performing relative to Ethereum in the last few weeks. And we're also going to take a look at the Bitcoin derivatives markets to see how investors are positioning themselves leading up to the event. So first, let's take a look at how Bitcoin prices have performed relative to Ethereum. So as we can see on the chart here, since July of this year, effectively Ethereum is up by more than 50%, while Bitcoin is up by only 5% in the same time period. Now, the sheer performance of the investment, the Ethereum investment, both in dollar terms and in Bitcoin terms, can be enough for some investors to consider taking profits ahead of the merge. In addition to that, this historical dislocation between the asset prices of Ethereum and Bitcoin may drive some newcomers into the space that are drawn by the excitement around the Ethereum merge to see this price dislocation relative to their historical performance and have Bitcoin look more attractive on relative terms. And now let's take a quick look at the price of Ethereum in terms of Bitcoin. Looking at the chart, we see that since essentially early June, Ethereum in Bitcoin terms has had this massive rally, which effectively brought the chart very close to this resistance level of 0.08 BTC per one Ethereum. Now, we can also see that this level has been rejected once in May 2021, once in November 2021, and just most recently now in September. Given the setup, with just hours remaining until the merge and Ethereum having failed to surpass this very key resistance, Bitcoin could stand to benefit from a relative catch-up trade based on the historical relationship in these two assets. Remember, there are going to be likely new investors coming into the space because of the excitement around the merge, and they will be looking at potential dislocations based on historical relationships that they could benefit or profit from. And this current setup makes it such that Bitcoin could stand to benefit because of its relative price dislocation. Now, taking a look at the Bitcoin derivatives markets for future delivery products like options and futures contracts can give us some insight as to how investors are positioning themselves leading up to this event. And now let's take a quick look at some indicators. Firstly, we look at the implied interest rate on the 1-month rolling basis future, and this is for the Chicago Mercantile Exchange. From what we can see on the chart, we've seen a tremendous rally from about negative 12% implied interest to a positive 3% implied interest as of this morning, or as of last night rather. And that rally in the implied interest rate is quite interesting because, as we can see from the chart with the orange boxes, every time there's been a big rally in this implied interest rate, it typically is followed by a big move in price. In the last two previous instances, it was a large, big move down in price, which occurred just a few weeks after this massive rally in the implied interest rate. So that is on this front. Now, taking a look at the Bitcoin put-call ratio, we see that it is currently at 0.56, meaning that there are about 2 call contracts for every put contract out there. And this is pretty normal relative to historical levels around Bitcoin. We see that we've been at the same level all the way back to April 2019. And what this shows us basically is that there is no group of investors that are disproportionately buying protection or speculating to the upside relative to historical levels as we lead up to the merge. And looking at the futures curve for Bitcoin, although the future curves were looking a lot better last night, after the CPI data that got out this morning, the curves are actually reacting. And now we see that the delivery for October is being priced lower than the current spot price. In Binance, we're also seeing this move around a lot on there a bit. And given that the Fed will likely be looking to increase rates faster in the remainder of the year, it would not be surprising to see the delivery for October and even November start trading into negative territory in terms of the futures curve for Bitcoin. Now, as always, we wrap up the show with a summary of the economic data and events that you can expect for the remainder of the week. But before we go there, we wanted to share a few words around the recent bailout conversations and stimulus conversations that have been occurring worldwide in recent weeks. Last week, we started seeing a wave of bailout and subsidy conversations stemming from the UK to Sri Lanka. In the UK, as you can see on your screen, their Prime Minister promised to do whatever it takes to keep the lights on and the houses warm in the UK for citizens this winter, even if that means printing a new $172 billion. Similarly, both the International Monetary Fund and China made pledges to bail out or assist several emerging market countries to ensure that they can restructure their debts and shore up their finances. This has greatly reduced the fear of default on this particular debt. Notably, China said it would forgive a total of 23 interest-free loans to African nations and direct $10 billion to the IMF. Remember, this is in addition to their own stimulus package of $44 billion that they unveiled just 3 weeks ago. Now, the IMF is working on assistance for Sri Lanka, Pakistan, Egypt, and Chile. And the first bonds to react to the news were the dollar-denominated debt in emerging markets. In fact, the spread between the local currency denominated bonds and their US dollar denominated bonds reached the highest point since the great financial crisis. Now, the fact that the US dollar denominated bonds in these markets were the ones that reacted and the ones denominated in local currency did not is again a sign of a strength of the US dollar and another sign of perceived weakness in the local currencies of these countries, even after accounting for all these bailouts and assistance that is being offered. It looks like investors are looking for a rinse and repeat of previous occasions where effectively the US dollar debt can continue to be restructured while the burden is passed to the citizens by weakening the value of their domestic currency and therefore reducing the value of these people's savings. Having access to US dollar accounts and US dollar savings options in these markets can materially change a person's financial future. And I know this from experience. Once again, this is a great example of why we work so hard here at Ledn to provide clients globally with access to savings options in US dollar stablecoins and Bitcoin. Now, to close this out, It seems that governments around the world are assessing the political consequences of not providing stimulus and bailouts, and to no one's surprise, they are once again choosing to solve by printing. With all that said, here's what you can expect for the week ahead. Today, we got the CPI number, as we just covered above. Tomorrow, we get the US Producer Price Index for the month of August. This is often seen as a leading indicator of what could be coming down the pipes for consumer price indexes. And the expectations here are similar from this morning's CPI. We'll continue to look out, and the market will likely react if the number comes in higher than expected. Expectation here is also for a negative 0.1% decline month over month. Now, Thursday, we get the Ethereum merge, the highly anticipated Ethereum merge, supposed to occur at around 3 a.m., but that's a moving target, so you can actually look at the Google tracker that they have on Google if you Google Ethereum merge. At 2 p.m. on Thursday, we get the statements from the SEC chairman, Gary Gensler, and also at 2 p.m., we get statements from the CFTC chairman, Rossen Behman. And then Friday is a quiet day for news. With that, we've reached the end of today's show. If you enjoyed it, I welcome you to like it, subscribe to our channel, share it with your friends. And if you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning the best interest rates for your Bitcoin and USDC. We also have the best interest rates for dollar loans backed by your Bitcoin if you need liquidity and don't want to sell your stack. And our most recent product, the Bitcoin Mortgage, lets you buy a house as big as your stack. Thank you, everybody. Los quiero mucho, and see you next week. Ciao, ciao.